Hey everybody, this is David Skrika. Hope you're all doing good. Yeah, so we're gonna just do a quick Scott chart of the day on because yesterday was Cyber Monday and we're entering the holiday season. So we're gonna look at some retail stocks. So let's just quickly look at here because of course, so Cyber Monday sales Black Friday sales were pretty good. They were up 8% year over year online, 1% year over year in brick and mortar stores. They actually expect it to be down year over year. So and I think those numbers were actually adjusted for inflation. So, and of course, inflation to year over year was falling to 3%. So it wasn't as hard, because that's the one thing when inflation's at 10%, you can say, oh my God, our sales are up 7%. Well, inflation's up 10%, your sales are actually down 3%, right? So that's always like a conundrum with that. So this is Best Buy. You can see it's kind of been trending lower since the summer. It has, is up pretty nicely today. I think it had some good Cyber Monday sales. So we'll go look at a longer term chart here. And it looks like Best Buy this could actually be a good trade. Someone could put on here. You could buy it with a stop loss of 60. That's the lows of late 2022. And if it could break this kind of 80 to 85 area, you could probably head back to 100 or something like that. So I would just be patient here. But like, if you were someone who wanted to take the trade, especially with us in the seasonal strong period for equities, because again, we are in the Christmas time frame. So that's also a seasonal strong period for retail. So I think this is something you could definitely look at here going forward but with Best Buy and the like here for retail stocks. And of course, let's look at eBay. Of course, they're a big beneficiary. eBay, very similar kind of looking chart here. Retailers have really lagged since topping in late 2021, really got hit by higher interest rates, slowdown in the economy the last couple of years. And you can see again, same thing, eBay about 35, 36 is their low. So you could buy here with that kind of stop loss. And then maybe this is just a big basing pattern in eBay. And these stocks are not overly expensive anymore. If we go look at, these stocks, PDEs and the whatnot, the problem is it's always tough with PDEs. Because you can see, eBay's got a single digit PDE and pays a 2.5% dividend, and it just shows you what happens to companies after a while. Remember, eBay was one of the big growth internet stocks years ago, and now it's kind of this value retail play, right? So PayPal would be another. Oh, sorry, I think it's PayPal. Same kind of thing. You can see hit low this October. There's a big gap down last quarter. They'll be reporting shortly. So they already did report earlier. So yeah, this is, you can see PayPal's really been killed because of course everyone was doing online transactions while the pandemic was going on. And, even if they do things online, there's more competitors now, Venmo and the whatnot. But PayPal is not kind of like this doesn't get that boost from everyone just having to stay home. But again, kind of a value play has come from over $300 a share to just over $50 a share. They had some things where because of people's political beliefs, they would suspend your PayPal account. I think that was a real erroneous decision by them. And I think they've probably kind of learned from that. But again, if you kind of believe in that maximum pessimism kind of thing that I talk about, PayPal looks interesting because it's off over 80% from its highs. And if we go look at again, P17, but the thing is that's on kind of depressed earnings. Like, let's see, at a $62 billion market cap, PayPal's, it's about 2 times sales. So I would say the valuation is average. It's not super expensive. It's not, cheap either. Of course, and we have Shopify. This is a Canadian stock, has come off really lows, from its lows. This is kind of like what you would use in Canada. Like, for example, when I put up the Inca One a deal on their gold. And by the way, the Inca One deal is excellent because there's almost no premium in the gold coins to the gold price. So anyhow, they sell it over Shopify. And Shopify, you can see, peaked at around 180 during the 2021 top, crashed to below $30 a share. And a sense here, I don't know if I'd be chasing it up here at these levels, but again, just shows you, we just looked at PayPal. Once the stock starts getting to like, down 80%, it's a large company, it's not going to fail. I trade, like basically, when PayPal was down, not PayPal, sorry, when some of these stocks were down 80%, they would have been trading, below revenues, et cetera, et cetera. So Shopify having a nice balance off its, off its lows. This is Walmart. Walmart, I definitely wouldn't chase it. We talked about Walmart gapping down on its last earnings. It's, it's kind of the big boy, the retailers, kind of the leader. So we can see Walmart has, really held up better than most. Here, Walmart's got pricing power, even though this, they sell a lot of lower end stuff. They have been able to raise prices. So let's look at Target. We talked about that. Target, you can see gapped up, but I've been really crushed. Again, another maximum pessimism kind of play. Target was down 60% from its highs at the last quarter, and it did kind of have a short-term base here and broke out of it, and now it's kind of seeing the resistance again at the 200-day moving average. So, and I would say this 140 is a pre-key level. That essentially gets you back to the high in this little tiny bounce here in Target. And and that's the moving average, if we break that, maybe you can head back to 160. Like, I'd rather trade Target here than trade Walmart if I were going to trade these stocks. One stock that we have in my newsletter or on my is Wish. Wish has gotten absolutely crushed. It's similar to like an Amazon type stock where it's all online. Most of the stuff comes from China and Asia, and it came out at the height of kind of the COVID bubble at $1,000 a share, collapsed to like $3-4 a share, has rebounded to about $5. It's about roughly where my price is. So if we go look at a shorter term of Wish, what you'll see is it's kind of like had this big move here, because they're looking they have a big cash back from that IPO. So they're looking to diversify into other businesses to kind of grow the company. So I kind of like this chart. It's pretty constructive. It's this move off the low, big volume, now kind of consolidating. It's up almost 5% today. And then I guess the final one, let's look at Amazon. And you can see Amazon is right near its recent highs, has done really done really well from its lows of last year. Of course, Amazon has all kinds of other businesses, the Prime streaming service, their cloud services, where actually most of their growth is not coming through now. But again, if you kind of looked at it looked like this is a pretty constructive, not perfect, but reverse head and shoulders bottom, and it's done really, really well. And, Amazon fell over 50% and actually went back to its COVID lows here and has come up quite nicely. So again, I don't know at these levels I'd be looking at it, but it's kind of the big boy of retail and has become the big boy of retail. So it's just kind of interesting to look at. Oh, and the last one let's look at more of just a pure bricks and mortars play. And that's, of course, Macy's. Same kind of thing. Macy's, came off a lot from the bull market high, fell from 35 to almost 10, kind of had this short-term base in here right now at the moving average, still kind of in a downtrend. Obviously, this is the most pure bricks and mortar play of them all. They have the big department store in New York City, et cetera, et cetera. A pretty cheap stock. To me, Macy's is kind of more of a trade type stock. Maybe you'd want to buy it here. And if we are in a cyclical bull market, which I think we could be in for stocks that could last to the end of next year, or into 2025, this probably would go back to the $20 to $25 range minimum, which is a pretty good gain, 50, 60%. We'll go look at it here. Trades at only 6 times earnings, has a 4% dividend. So it's a pretty good, a value play. Of course, because it is, associated with the consumer, it's very cyclical, but you can see it has 24 billion in revenue and only a 4 billion market cap. They probably, I haven't really looked at the financials, excuse me for that, but it's not something. Macy's is not exactly a stock I think about all the time. They do have almost 6 billion in debt. So net debt is 2.1 billion, which is pretty reasonable though. So that's probably one reason they have but obviously with nearly 17 billion in assets, 6 billion in debt is pretty reasonable, and they have worked that down from 8 billion a couple of years ago. So this is an interesting kind of play as well. Actually, we'll look at Kohl's. Actually, let's look at Kohl's and Target. Kohl's and Home Depot. So Kohl's, you can see, with kind of interest rates topping or bonds topping, Kohl's has moved lower because, these are the kind of like home and remedies, home improvements. These two stocks have gotten hit pretty bad because the housing market has dried up. And of course, either if someone's re-renovating their house using cheap money or buying a new house, a lot of the stuff is going to come to play from places like Kohl's and Home Depot. So we'll look at Home Depot as well. And Home Depot, this is kind of a constructive chart in Home Depot, though. You can see after peaking at 400 and went to 260. And if you can kind of break out of this long-term base, this is such a long-term base. I would think actually the next run in Home Depot, again, and if this bull market lasts another year or year and a half, that next run in Home Depot could really be a large run. So that's something to look at. And the last one is, this is Restoration Hardware. This is a more leveraged play because they kind of sell higher end, goods and services. Oh, I'm gonna show one more as well. And same thing on the thing, kind of like Home Depot, kind of this nice base going on after a huge move down. First of all, a huge move higher after COVID from under $100 to nearly 700. And now kind of in this 200 to 300 range. And it's kind of become a yuppie kind of company. Like you can go there and I think they serve food and drinks and like I said, they kind of sign higher things. So another interesting one is Overstock, and Overstock has kind of this. It's kind of in a restructuring right now. I guess maybe do they even trade anymore? Maybe I'm way out of it. Okay, well, forget Overstock then. I think they might have changed things up there. So anyhow, don't worry about that. But anyhow, I think I showed you enough anyhow. So you can see most of these. So the way these retailers look is either you have these beaten up ones that fell into this October and are now coming off their lows, or we have these ones in this kind of consolidations, or we have like the Walmarts and the Amazons, which are the kind of the leaders, which are near their high. So I actually like kind of the ones in the consolidations, to be honest. Like, obviously, I like Wish because it's a super beaten up play, but I kind of like the Restoration Hardware or the Home Depot as the plays. That would be my choice because I think the charts are most constructive, and especially, again, with me believing in kind of the seasonality of trading, et cetera, and me thinking that we were and thinking that we will continue to rally in markets a few months. Those are the ones I can do. And like you could buy this here with a $200 stop loss, right? So I always like that kind of trade as well. Okay, so this was a little longer than usual for one of our free stock charts of the day. Oh yeah, the disclosure is I own Wish. Or my family owns Wish. That's the only one I own of all these companies. I have no positions, puts, calls, anything on any of the other companies. So and Wish, we only own the stock, no options. So I hope you enjoyed this, and I hope everybody is doing well, and hope you all had a great long weekend and Thanksgiving weekend, and we're kind of in the holiday grind coming up here. I'm not really a big holiday person. I think moving to the Bahamas, seeing palm trees every day, seeing warm weather every day just kind of got me out of it. It's tough for me to really get into Hanukkah or Christmas or any of these things with that, but whatever. Anyhow, I hope you enjoyed the video, and take care. And I think I got some new exciting companies. I'm really getting going on the company side of the stock chart of the day. I want to get a lot of companies between now and the end of the year, because part of the reason is when I get into these companies, I also accumulate shares into them, and I want to accumulate shares because I think now is the time to do it in the mining markets. We're really going to talk about this later this week. I think I may do my gold breakout video for both the free list and the paying list a little earlier this week, maybe like on Thursday or so. Thanks, everybody. And